Do you want to be a six-figure funded trader in 2025? Or do you want to be a six-figure trader in 2025? If the answer is yes, then on this video, I'm going to be giving you guys the six-figure trading blueprint winning strategy, or in short, how can you develop a six-figure winning strategy? Now, that's going to be coming from a six-figure funded trader itself, or a six-figure trader. That's also going to be coming from someone with more than 10 years or about 10 years of experience in the Forex market, and someone who has done what he's going to be showing you guys on this video. So if you want to learn how to get a six-figure blueprint strategy, then make sure you stay to the end and leave a thumb up on this video. So let's go. That's why on my screen, if you can see six-figure trading blueprint winning strategy. Our goal is a winning strategy, and we are focusing on what? 2025. What is working in 2025? Because what was working in 2024, there is no guarantee it's still going to be working in 2025. So foundation, let's start with a foundation of a six-figure trading strategy. So what comprises of a six-figure trading strategy? Number one, clear goals. Your strategy should have very clear goals, and part of those goals is how much do you want to make per month, or how much do you want to make per day or per month. So clear monthly returns. How much do you want to make? Then again, risk and money management parameters. Your strategy, guys, make sure you take notes. Make sure you take notes to the end. Get your pen and paper, take notes on everything we are mentioning here, because you won't see it anywhere. These are sacred tips and tricks that you need to build any bulletproof six-figure trading strategy. It's as easy as that. So it must have risk and money management parameters involved. Where are you going to be getting in? Where are you going to be getting out? How much are you risking on that particular trade? And everything. Again, understand your trading style. So ask yourself, different traders, you can see my fingers, they will never be the same. We have traders that have different risk tolerances or different risk appetite. So ask yourself, what is your risk tolerance? What is your risk appetite? What kind of trader are you? So when you talk about understand your style of trading, we have scalpers, we have day traders, and we have swing traders. So scalpers are people, their trade is open and closed within seconds to up to 5 minutes. Day traders are people, their trade is open and closed within a 24-hour period. And swing traders are people, their trades are open and closed within days to up to weeks. We even have position traders. A position trader can just take about 1 or 2 positions per year. But I want you to focus on scalpers, day traders, and swing traders. Ask yourself what kind of trader you are, and that will help you to figure out how to figure that in your six-figure trading strategy. Then structure your trading plan. So you must have a structured trading plan. Talking about a structured trading plan, your trading plan must state very clearly your entry rules. So how are you going to enter into a trade? Your trading plan must state clearly your exit rules. How are you going to exit trade? And your trading plan must also state clearly your risk management parameters. As easy, the most important under your risk management parameters is your risk to reward. So everything needs to be stated under your structured trading plan. And with that, that's the foundation of a six-figure trading plan. After the foundation of a six-figure trading plan, let's go to a risk management strategy. So what are some few steps to take when implementing the risk management strategies for a six-figure strategy, all right, or for a six-figure trading strategy? Number one, limit risk per trade. Very, very important, limit risk per trade. And if I can advise, don't risk more than 2% of your account per trade. The big people in the game, they are not counting themselves big because they are able to make 100% per day. They are able to flip $100 to $1,000. No, they count themselves in terms of percentage growth. If you can make just 4% of your account per month, bro, you'll be a multi-millionaire in Forex trading. if you can make just 4% of your account per month. So I'll advise you to make to risk not more than 2% of your account in one trade. Then always predefine. Remember, we're talking about limit risks per trade. Predefine your risks before you get into any trade, so that you don't get into the trade and then you start guessing where to put your stop loss, how much am I risking, where should I put my take profit, no. Predefine your risks and accept the risks involved in trading. Very, very important. You should know that trading is a risky business, and if you are getting into it, make sure you accept the risks. And then another point under risk management strategies for a six-figure funded or for a six-figure strategy is proper position sizing. All right. Under proper position sizing, make sure you use advanced Forex calculators. Just go to Lionheart Funding Program. It's a program that has offered all these tools for free. So go to Lionheart Funding Program and then just click on tools. When you click on tools, you'll be able to see their Forex calculators, their market time zones, economic calendar, and all the tools you need as a Forex trader. 100% for free. So make sure when you're talking about proper position sizing, use Forex calculators, use AI powered tools, use ChatGPT and stuff like that. And then your approach is very, very important when it comes to proper position sizing. And then another effective point or another key point when it comes to a risk management strategy for a six-figure strategy is effective risk to reward. As a rule in Godlove University, if you know Godlove University is an institution where I personally mentor people on how to trade from A to Z. And as a rule we have in Godlove University, you never press buy and sell without having a risk to reward of at least 1:2. So I will recommend you do the same thing. Never press buy and sell without having a risk. Always go for a risk to reward of at least 1:2. With a risk to reward of at least 1:2, you just need to be right 44 times out of 10 times. You just need to have a win rate of 40% and you still be a millionaire. Just a win rate of 40%, meaning out of 100 trades, you have 60 of them losers. Just 40 winners, you will still be a millionaire. Out of 10 trades, you have 6 losers, just 4 winners, you will still be a millionaire at the end of the day. If you practice having at least a risk to reward of at least 1:2. Then again, be realistic. Since I mentioned of having a risk to reward of 1:2, you see people that will go here and they are going for a risk to reward of maybe 1:10, 1:5. That's not being realistic. I'll just stick with 1:2, or at most a risk to reward of 1:3. All right. So be realistic and follow. Make sure you follow what you are doing here religiously. Meaning, in your trading strategy, if you say, okay, I'm going to be going for a risk to reward of 1:2, follow that religiously, and in the next trade, don't jump and start using 1:1. Start using 1.2, 1.6. No, follow that religiously. Very, very important. So with this, these are steps you need to follow when building the risk management machine. I call it the risk management machine for any six-figure strategy. Good. So with that, let's go to the next point, which we're going to be talking about trading psychology and discipline. You can't talk about a six-figure trading strategy without incorporating trading psychology. So under trading psychology, we're talking about stay consistent with your strategy, right? Stay consistent with your strategy. Here, we're just talking about a situation where let me just take, for example, Lionheart Funding Program. I'm also the founder of a pro firm, I'm sure you guys know. And as the founder of Lionheart Funding Program, we have more than 50,000 traders trading in Lionheart Funding Program. And I've been able to see why 90% of all Forex traders fail. Because I can see everything they are doing, I can see how they are trading. And one reason why they fail, one main reason why they fail is strategy hopping. They hop from strategy to another. They never start a strategy and follow it to the end. Immediately you see someone trading with a strategy and the person encounter a loss or a series of losses, boom, it's gone. The person stops using the strategy immediately. That's one reason you will never make it, or they never make it in Forex trading. So pick one or two strategies and stick to those strategies and practice them from time to time. You'll be able to know markets that perform very well with the strategy. You'll be able to know time frames that perform very well with the strategy. Market sessions that perform very well with strategy. Data is king, and you only be able to have that data when you've practiced the strategy over and over, not jumping from strategy to strategy. So this point number 1 under trading psychology is very, very important. Remember, we're talking about trading psychology and discipline. Trading psychology and discipline. And then avoid overtrading and emotional decision making. Here, overtrading, you guys already know what it means, where you want to look for an opportunity at all the times. So let's focus more on emotional decision making. There are many traders, when they get into a trade, maybe before they get in, they already have a plan that, okay, I'm going to put my stop loss here, I'm going to put my take profit here. But immediately they get into a trade and the trade start going against them, you see them going to start making emotional decision making. They go and remove their stop loss, they push it down. Or when the market start going in their favor, they run and they start pushing the stop loss up. So that is what they call emotional decision making. That was not what you planned before getting into that trade. You started making that decision when the trade started going against you, or when you started going into the profit. Because when you start going into profit, people start being greedy sometimes. You see them removing their stop loss, removing their take profit. Sorry, that's being greedy. You are just greedy. All right, that's greed. And that greed, you are becoming greedy because you are making emotional decision. All right, you are making decisions based on your emotions. So avoid making emotional decisions, and to avoid this, you just predefine your risks before you get into any trade. You predefine your trade, and you also pre-plan your trade using a trading plan, and predefine your risks using proper risk management. Then stick to a trading plan. Good, that's something I just mentioned up here. Under avoiding emotional decision making, you need to have a trading plan and you need to predefine your risks. So have a trading plan, and in your trading plan, you need to state clearly your entry rules, you need to state clearly your exit rules, and you need to also state clearly your risk management rules. Exit rules, entry rules, risk management rules. If you can state this on any trading plan, that will be a bulletproof six-figure trading plan. So practice techniques, very important. Practice techniques to improve focus and reduce stress. So you need to practice all techniques that can help you to reduce focus, to improve focus. Sorry, you need to practice all techniques that can help you to improve focus and reduce stress. For me personally, it's spending time with my family, spending time with my wife, spending time with my kids, traveling, doing what I love. So that just helped me to improve my focus and also reduce stress. It also helped me to be able to have a balanced life. So as a Forex trader, always have something that helps you to be able to improve your focus and reduce stress. Part of improving your focus, if you're someone who is religious, maybe it's just praying, maybe it's helping other people, maybe it's meditating. Do something that helps you increase your focus and reduce your stress. So with that will help you to build a strong trading psychology as a strong trading psychology in a six-figure trading strategy. Remember, let's not digress. Our main goal is to build a solid six-figure trading strategy. All right, the goal is for you to be a six-figure trader. And for you to be a six-figure trader, you need a six-figure trading strategy, which is what we are talking about. So let's talk about backtesting and optimizing a six-figure trading strategy. Under backtesting and optimizing a six-figure trading strategy, we start by saying backtest on a demo. Where backtesting on a demo, remember here, you focus on what? On historical data. The trade has already played out. All right, it has already played out. You're just going back on historical data to see what would have actually happened. Would you have had a winner or a loser? Would you have made money or not? Would you have hit a 1-2 rigs to reward or a 1-3 rigs to reward? Which market condition did very well? Which time frame did very well? Which market session did very well? You see, so you are doing that on what? On historical data. So you should use historical data to backtest to see how the strategy would have performed. After you backtest, the next step is for you to forward test There's even something I'm sure you guys are hearing for the first time, which is called forward testing. So forward testing is when you are actually trading it in a real market condition. The real market condition can either be in a demo account or a small live account. Remember, I'm saying a small live account. The conditions are real because that's the same feed. If you are trading on real money, you have the same chart, you have the same quote and everything, the same price. So that's why we are already calling it real market conditions, right? Because the conditions are real, whether it's demo or not, whether it's simulated money or real money, all right? So now, what's the difference? In a demo account will help you, or let's start with a demo. With a demo account, you can see the line is coming down. With a demo account will help you to test in real market condition. So you, after backtesting in historical data, a demo account will help you to see how that strategy would have performed in real market conditions. All right. So that's what a demo account will help you to do. And then a small life account will help you in testing your emotions. That's what a small life account will do in testing your emotions. And this small life account should be something you can afford to lose. All right, as easy as that. This should be something you can afford to lose. This should be something, if you have to let it go, it won't be anything that is going to affect your lifestyle. You won't cry after it. It should just be something you consider as your fee, something you can let it go, something you can afford to lose. So a demo account and small life account. A demo account will help you to test your strategy in real market condition. A small life account will help you to test your emotions, because remember, that is real money. That is why sometimes you guys can make a lot of money in your demo account, but when you start trading on a live account, either small or big, you find it very difficult to make money because emotions are playing a part in that. Emotions are going to play a big role because that is your hard-earned money. Demo account, that was visual money. If you blow that account, you just go to your broker, just add different money and you continue. But that's real money. So that's why I'm talking about you using that to test your emotions. And then another point under backtesting and optimizing a six-figure trading strategy is regularly review your trading journal. All right? Under regularly reviewing your trading journal, it will help you to improve. All right, because anytime you go to a trading journal, you can learn from your losses and improve using your winners. You can learn from your losses and leverage from your winners. So it will help you in improving. It will also help you to adjust. So if you see your losses, you'll be able to see what you did wrong and you can easily adjust. And it will also help you to adapt to market conditions. That's everything, regularly reviewing your trading journal. That's why you need to have a trading journal in the first place. And going back to review your trading journal is seeing all the trades you've taken. So you either see where you need improvement, where you need to adjust, and where you need to adapt more. Very, very important. And then again, diversification and adaptability. Very, very important. Under diversification and adaptability of a six-figure trading strategy, what do? You try multiple instruments. I used to laugh when people come and say, no, I only trade Great Britain Pound USD. I only trade Euro USD. Bro, you need to diversify. Learn a strategy that will work across different assets. So that if you come to Euro USD or Great Britain Pound USD and you don't see a setup, you won't be forcing the market to produce a setup when there's no setup. All right, you just go to another currency pair because the strategy is still going to do very well. So learn a strategy that will work across different assets, different time frames, and different commodities. So that's why I'm talking about you multiple instruments. Learn how to trade Forex. Learn how to trade indices. Learn how to trade synthetic indices. I'm going to be bringing a full course also to you guys on how to trade synthetic indices. And then again, also learn your strategy must be able to perform during high and low liquid period. Remember, in the Forex market, we have high liquidity period and low liquidity period. So your strategy must also learn how to adapt it during high liquid period and low liquid period. Different market sessions. We have the London session, the New York session, the Asian sessions, and all of that. So learn how to adapt your strategy to perform during different market sessions. You'll be able to know which market session performs better, which one you should focus more, and which one you should stay away from the market. So that's why I'm talking about different market sessions. Also learn different time frame analysis. Top-down analysis is nothing new. Top-down analysis is something that has been there since from the 1980s, all right? So just learn top-down analysis where you learn to use different time frames to see what's actually going on in the market. For example, if I want to buy on a 1 hour time frame and I'm planning to buy that day and I go to the 1 hour time frame and I see that the market is bullish, I want to confirm with the 4 hour time frame to see if on the macro level the 4 hour time frame is also buying. That is top-down analysis. So also learn that and incorporate in your 6-figure trading strategy. Another point you guys can't miss out when it comes to building a strong 6-figure trading strategy is incorporating automation and technology. There's no way we're going to stop without talking about you being able to incorporate automation and technology. Very, very important. And point number 1, use expert advisors or bots to automate repetitive tasks. Remember, you're going to have some tasks that are repetitive, right? That maybe you have a strategy you must already have a strategy that is working, and then you can just build a bot or an AI or a tool or an expert advisor that will be able to automate those repetitive tasks to make it automated. It makes life easier. That's why Patrick's Pro is one of the most viral and the most profitable robot out there, because it has strategy behind that are profitable, and then it just automates that strategy and it makes money on autopilot. So use expert advisor and that to automate repetitive tasks. Then implement AI and machine learning tools. Your 6-figure trading strategy, I'm not talking about a strategy for $10. Your 6-figure trading strategy you must be able to implement AI and machine learning tools. Maybe you use ChatGPT, all of that to fine-tune your strategy, to do other things. You must be able to do that. And then another thing, keep up with the 2025 innovations and trends. All right? 2025 innovations and trends. You must be able to know what is changing. You must be able to know what is working. You must be able to know what you need to be able to adapt. You know, it's either you adapt or you die. Do you want to adapt or you die in this new era of AI, in this new era of artificial intelligence, in this new era of tech innovation? Do you want to adapt or you die? If you want to be rich, you need to learn how to adapt. So that's why I'm teaching you guys this. And then with that, let's go to now the next. I think this should be the last on how to build a strong 6-figure trading strategy where the rule of pro firms. So what is the rule of pro firms in a 6-figure trading strategy? What is the rule of pro firms? Very, very important. So build and test strategy. So build and test strategies on a demo or a live account first before you try it on pro firm challenges. I used to always tell people, if your strategy sucks on a $10 account, that strategy will still suck on a $1 million account. So just because you have a $100,000 account doesn't mean you're just going to magically start making money in Forex. If that strategy was a dumb strategy on a $10 account, is still going to be a dumb strategy on a $100,000 account. So perfect your strategy before you want to pursue big capital. You're not just magically going to become profitable because you are trading with big capital. That's what I'm explaining on that particular point. And then adapt your strategy to meet pro firm rules. So if you want to buy a pro firm, the most important rules here are daily drawdown and overall drawdown. So your 6-figure trading strategy should be able to adapt to those rules. Then use prop firms to scale. The main reason why you are trading with prop firms is for large capital and scaling. I'm teaching you guys on how to build a 6-figure trading strategy. You won't trade with 6 figures using your own personal capital. At least 99% of people watching my video won't trade with 6 figures using their own personal capital. You need capital from a prop firm. That's why we incorporated prop firms here. And the main reason why you are using them is for large capital and scaling. You know how to trade, you don't have big capital. The prop firm knows how, the prop firm has big capital, they don't have good traders. So you guys will come together and collabo. They used to say collabo. You guys will come together and collaborate. So that's why we are putting all of this. So learn how to use prop firms to scale and to also get big capital. So last point, what is now the roadmap? Very, very important. What is the roadmap for you to succeed in Forex trading, or for you to succeed as a 6-figure funded trader in 2025 with a 6-figure trading strategy. Roadmap, start small. Do I even need to expatiate more on this? Roadmap, start small. Start small with consistent practice. With consistent practice, start small with consistent practice, consistent profit, consistent growth, consistency. I don't know how many times I can say it, right? So start small with consistency practice, consistency growth, consistent growth, and consistent payout. Then scale as confidence grows. The same thing I was just explaining. You're not just going to magically just move from a $50,000 and start trading with $1 million account without having that confidence. So you should be able to scale as your confidence grows. And then reinvest your profit. Like we used to say in South Africa, don't just eat all your, don't just chow all your profits, all right? So when you make those profits, learn how to reinvest. Learn how to use the 50, 10, 50, remember 50, 10, 50%, 50%, 10, 50%, 50, 10, 50% rule to reinvest your money. I already taught you guys this 50, 10, 50% rule to reinvest your profit. And there's a detailed video already on this channel teaching you guys this particular rule. Again, after the roadmap, when you start small, then leverage mentorship. Leverage mentorship. A mentor is very, very important. When I started 10 years ago, for the first 2 years, I didn't have a mentor, and in short, I was the first person in Cameroon to try Forex trading. There was no one I could ask any advice. There was no mentor. So I tried to figure out everything on my own for 2 years, and I couldn't. It's for the last year of the 3 years of me being profitable that I actually found a mentor from the United Kingdom, from Apare Fund, from a hedge fund, that they taught me on how to trade. So a mentor will help you go from point A to point B very fast. A mentor has already committed those mistakes, so he will just tell you what's working. A mentor has already seen everything you are still going to see. A mentor has gone through the pathway already, so you need a mentor. I'm talking about a mentor. You need to enroll. You can enroll in Godlove University. So what is Godlove University? Godlove University is my Forex Academy, or a Forex Academy which I created, and it has become viral with more than 5,000 students, where I personally teach people from A to Z on the steps I have been using for the past 10 years to make money from the Forex market. So check the link on the video description to enroll in Godlove University and be amongst millionaires that are making money on a daily basis. Telegram. So Telegram, remember we're talking about leverage mentorship. Telegram community. Also check the link below to join my free Telegram community, where you also get free updates from me on a daily basis. And also follow me on all my social medias, on TikTok, follow me on TikTok, follow me on Twitter or on X, follow me on Instagram, because I also share tips on a daily basis. All my accounts on most of these platforms are verified with the blue tick. So if you go to these platforms and you see accounts that don't have the blue tick, stay away, because those are impersonated scam accounts. I think it's only TikTok that don't have a blue tick, but Instagram has a blue tick, Twitter has a blue tick. Even here on YouTube, I have a tick on it. So make sure you follow those ones. And then at the end of the day, the statement you guys need to write it very big on a page on its own is focus on long-term consistency rather than short-term gains. All right? For you to win in Forex trading as a 6-figure funded trader, or as a 6-figure trader with a 6-figure strategy, you need to focus on long-term consistency rather than short-term gains. Focus on long-term consistency instead of short-term gains. If you can do this, trust me, you're going to be able to build a 6-figure trading strategy, and you're going to become a 6-figure funded trader. With that, thank you guys so much for watching. Make sure you smash the subscribe button below to subscribe to the channel, like, and also share the video with a loved one. I'm talking about, I just mentioned a prop firm on the video. I also mentioned a prop firm, mentioned an automated tool, Patrex Pro, you can use check the links on the video description to get a prop firm that can give you capital up to $600,000. If you want to use Patrix Pro, also check the link on the video description. And as always, for mentorship, check the link to enroll on the video description to also enroll in Godlove University. And talking about that at the end of the day, they will be able to pay you when you make money. If you want to use my recommended brokers, also check the link on the video description. Check out this video, which was a video on how you can now become a six-figure funded trader. After knowing the six-figure funded strategy, how can you become a six-figure funded trader? So click this link to watch that particular video. Also check out this video, which shows the 50-10-50 rule, which I just explained on this particular video. Click here to subscribe to the channel if you haven't done so, and I'll see you guys on these other videos. Peace.